Good Friday afternoon, everybody. I'm Peter Grant with Zaner Metals with this week's Zaner Week in Review. My colleague is in the Chicago Financial District, as always, Mr. Peter Thomas. How are you, sir?
Tired. I think my eyes are spinning concentrically. How do I look? It's
Yeah,
been
not too bad,
it's pretty amazing. It's
right?
been, it's been wild, and
It's hard to believe that it's been a week since we had that huge drop in the market, and we shot the
yeah,
last Week in Review, and we looked like we've been rode hard and put away wet.
yeah, and then we had the largest one-day rally in the history of the market, and then nothing but good news coming out, and they tank it. I mean, it's just you tell me. And in the meantime, the metals have been all over the board.
Right.
So
But
I
but
mean,
ending up higher. So here we are on
yeah,
a
right,
week later after the big sell-off.
yep,
Gold's up 6% on the week.
right.
Silver and platinum up about 4%, and our friend palladium down almost 3%
Which
on
is
the week.
feeling the pressure of what's going on in the Dow and as far as what's happening in China. So it did exactly what we said it would do, no different.
Right. So what I'm seeing is the safe haven gold has a strong bid. We hit a new 8-year high today.
Right,
A lot of this, coming on, based on coronavirus, certainly. We also saw a lot of accommodation come into the market, primarily in an effort to, hopefully support demand in the stock
right.
market. I think is the major motivation there.
So you're
Uh, the,
referring, of course, to the half basis
yeah,
point
50
cut. Yeah,
basis point
right,
rate cut by the
right.
Fed. The Bank of Australia cut, you know,
Down to a
to like
half.
a record low
Yeah,
in their benchmark
in their
interest rate,
history.
0.5%.
Yep.
Bank of Canada cut
Bank of
by
Canada
50
too.
basis
That's right.
points
Yeah.
as well. And then we saw an $8.3 billion kind of fiscal injection that was signed today by the president to hopefully
Combat the
mitigate the
virus.
spread of the
Right.
virus. So
Yeah, that was
just real
interesting.
quick, Pete, since you're pre-med, um, what's the latest on coronavirus?
Oh, we need to bring our people up to speed. This is my numbers are from WHO, World Health Organization. I've been using them as a source, and cases, just if you remember when this started, I told you if we get over 100,000, we're going to have to look at it hard. We just hit 100,000 today. They're saying that the death ratio has not changed, which means we do not have a mutant. Remember, I told you viruses, their job is to mutate so that they can further live and live longer, sort of like the flu. But a mutant isn't a real big deal unless it goes left-handed, which it hasn't. So far, we just have a flu type mutation. So there's no need for panic here. And it looks to us like we're seeing so far from the people that have been infected recently, a little better than a 55% recovery ratio reported already. So things aren't as bad as a lot of people would like you to think.
Yeah, I think it's getting a lot of hype, and I'm hoping this
Yeah.
doesn't set a bad precedence in the future. I mean, there's just so much information at everybody's fingertips right now,
Right.
and my concern is that the news agencies are going to realize that this is generating a lot of clicks. So every time there's a new strain or new virus out there, new flu, um, they're going to hype it up because people are
I
interested.
Oh yeah, and unfortunately, you know the old saying, if it bleeds, it leads,
Yeah.
and that's what's going on in the press right now. And we're still, I mean, there's a lot of wonderful drama. They run the helicopters out to take pictures of the ships that are in quarantine, and
Right.
but by the way, they're in quarantine. Okay,
Yeah.
so it doesn't get better than that to have someone on a tin can off of the shore rather than infecting people. So,
Right. But
um,
the reality is that from a market perspective, it is moving markets.
oh yeah,
And so we,
yeah.
we, we do have to kind of address it, I think, but we're not going to dwell on it too much here, I
No,
think, because I
I
think
think the
everybody's
one,
up to speed.
yeah, I think the one note that I found interesting that you and I talked about last show was that China was burning their money, if you recall, in
Yes.
order to have disease. America has started the policy of Asian funds coming in to be repatriated are now being isolated.
Hmm,
So
interesting.
yes,
Yeah.
so that was a precedent that I think was wisely followed.
Yeah. So
Yep.
let's get back to the metals because something
Yes.
really interesting is going on here with gold up 6% today on the week, and
Right.
silver only up 4%, and within the recent range. The gold silver ratio is at 100+ year high. I mean, it's basically right on the high from 1941 at 97.31. We're trading like 97.25 right now. And so I think back to history and some reading that I've done in the past, and I know that that China was forced off of the silver uh, benchmark, so backing their currency with
Back
silver.
back when they used to issue the silver bond. I remember when they came off of that,
Yeah,
reading about it. I think you've done some background research on it too.
yeah, and I so what I know is that as China came off the silver standard, they sold a bunch of silver into the market, and the price of silver basically halved from a little bit over $12 to a little bit under $6.
Right.
And that drove the gold silver ratio up to 97.31 in 1941.
Right.
Um, and so we're right there.
Yeah.
And you know, as far as I know, in modern history, this is 97.31 is like the all-time high. I mean,
It is, and I'll tell you, if you remember, I did the Matt Justice Pod show, and I said the silver gold ratio can go to $1, and he was like, "I believe it. It looks like it's got the velocity and the momentum to do that." And as you see, we're pretty much there.
yeah, there's basically no resistance beyond the 97.31 level, and so I think the next logical objective is 100.
Is 100.
Yeah.
Absolutely right. Yeah, go to the buck figure, the $1
So
to $100 ratio is there, and the question becomes, how valid is that number now? Because it's very obvious that we're seeing a flight to quality, and that the industrial usages, which drive a great deal of silver, just aren't there right now because of the disease. And how far can this go? There is no top to this.
yeah, yeah. So it's going to continue to be, I think, pretty volatile. If you're looking for a safe haven, I'd be long gold for sure. And I'd probably stay away from platinum and silver, um, at least for the time being, as the coronavirus crisis sort of plays out.
I think you're right. I think that's exactly right. I think that as we said 2 3 weeks ago, 2 3 shows ago, we said, look at it appears that industrial production, industrial demand coming out of China for the Green Deal that they signed in order to clean the air, in order to promote the use of catalytic converters, are not going to be enforced because their car sales numbers were down 90%, and that their production was so low at the moment that there was going to be no demand for PGMs, and that's what's happened.
Right.
Yep.
Well, as we look forward to, oh, and the other thing I wanted to make note of is that getting back to the Fed rate cut,
Yes.
if you recall, as they were going through this tightening regiment, the Fed funds rate hit a high of 2.5% in December of 2018. Since then, we saw 3 25 basis point rate cuts last year. And then we saw a 50 basis point rate cut today. So they've shot half of their rate cutting ammunition already. And
That's an
what's
interesting way to
interesting
look at it.
about that is that, the last GDP print was 2.1% in the fourth quarter of last year. And we just, the last two jobs numbers, the most recent one came out today, way above
Oh,
expectations.
275 was blew everybody out of the water, and everybody was looking for exactly what you said, a much lower number.
Yeah. So it's pretty interesting that in a 2% growth scenario and strong labor situation,
Yep.
we've cut 125 basis points.
And it doesn't look like we're going to see any change in it anytime soon. It seems like this is where they want to be, and it looks to me like they're very comfortable here.
Yeah, and what I know is that, so real interest rates, the current yield, adjusted for inflation,
Yes,
has been negative, and now it's even more negative. We saw the 10-year Treasury hit new all-time low yields
yes,
this week,
this week, yeah,
in the below 1%.
yep.
I think it got as low as zero point 0.7 and change, and so again, negative real interest rates is an environment where gold really tends to thrive. And so I'm quite bullish on gold, continue to be quite bullish on gold, and perhaps even more so. And the as you think about the possibility of an actual recession,
Hmm.
I think there is legitimate risk that we well and truly go into negative territory on the Fed funds rate,
It's
sort of following the lead of the Bank of Japan and the European Central Bank and the Swiss National Bank that have all done it already anyways.
oh yeah,
Um,
and
and
the Bank of Japan has been 22 years into negative interest rates, and they've done okay. So
yeah,
it can be done and done for a very long time.
so if real negative interest rates is an environment where gold thrives, um, if we actually do take the Fed funds rate below zero, below the zero bound, I think that gold's going to be off to the races.
And as you know, I over the week I collect the numbers for central bank purchases, and we saw this Turkey came in and bought 16 tons. Russia bought 8 tons. Qatar, which you don't see into often, bought 1.6 tons right out of the blue. Uzbekistan bought 2.5 tons. So we're seeing new smaller players coming in from the central bank doing purchases, which we're already up to 21 tons with the smaller players. So the 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 market itself is inelastic. We only see the gold market really produce annually about an additional 1.2% from new mining and recovery. If we see a lot of new central banks coming into the market, we might get to the point where we've stretched that rubber band and we no longer have an excess and we might go into deficit as far as production goes, which would be very interesting.
That would be a bullish scenario as
Yeah.
well, because we saw what the deficit situation has done to palladium in recent years. It just took off like crazy. Well, we've covered a lot of ground in a short
Yes.
period of time here. Looking ahead to next week, obviously coronavirus is going to be, front and center in everybody's mind. We've got CPI and PPI out next week. I expect inflation numbers to remain pretty tepid, particularly with the sharp drop in oil that we've seen. Also,
40,
Michigan sentiment.
$42 a barrel. We should mention it. I mean,
Yeah,
Putin and the Saudi Arabia were really slugging it out today in some rather heated words about they asking Putin to turn the valves back. And he's, hey, I got bills to pay, guys. We're not
I've
slowing
got
down.
gold to buy, my
I got
friend.
gold to buy, exactly right, and
That's
we
right,
buying
and
a
I need
lot of
my oil revenue to
it.
do that.
Yeah,
So
and oh, by the way, I'm
giddy
still
up.
in a number of wars around the world that got to be paid for. So
Yeah.
we're gonna stay busy, but it's very interesting to see that today being a Friday, when gasoline companies lower their or raise their prices, it's going to be cheap out there, guys.
Yeah.
Congratulations! Anybody got some driving to do? Fill up.
Road trip.
Road trip is the
And
name. Yeah.
yeah, so the other thing I wanted to mention that's on the calendar for next week is the preliminary Michigan sentiment number for March. And so it'll be interesting to see what kind of hit. I'm going to imagine it's going to take a pretty good hit on
What are you
sentiment.
thinking?
I don't know that I'd hazard a guess at this
Yeah.
moment, but
Okay.
I could see a pretty significant hit on that,
Okay.
which may weigh on the stock market next week as well. So we'll have to wait and see on that.
I
Um,
know. All right.
again, a
Well,
lot of ground covered.
lot of ground to cover and a lot of stuff that additionally needs to be covered.
I don't
So
feel quite as haggard this Friday as I did last Friday.
I think we came in. It was sort of like we went the 12 rounds, the championship rounds last week,
Yep.
so we were a little more ready for this week. And when, for example, rhodium flipped $1,200 today, we kind of went, oh, rhodium moved $1,200. Okay, it was,
Is any business actually getting done? I know that you deal in rhodium there in Chicago. Anything getting done at this crazy volatility?
I'll tell you in all sincerity, and we deal with some of the biggest guys out there in rhodium, and they're all, I mean, they're literally frightened. I mean, I had a guy that had a $660,000 bid on an amount of product, and in the course of 20 minutes it turned into an $800,000 deal, and he was like, I don't think I want it. I was like, I understand, it's
Yeah,
just,
because it might be a $500,000 deal in the next 20
in an
minutes.
hour. Yeah, exactly.
Yeah.
So it's scary. It really is. And you know what? You can't blame the guys. It's just so thin. And if you end up and it starts falling, and China's not there to backstop it with their usual 60 or 70% consumption lately, you're going to end up in a real problem.
Yeah, that's right.
Yep.
Left holding the bag, as it were.
As
Left
it
holding
is.
the rhodium.
Holding the rhodium. Yep.
You don't want to be there right now because of the volatility.
No, I agree with you.
With that, we'll say have a great weekend. I'm
bet.
Peter Grant in the Denver office.
Pete Thomas in Chicago. Thank you. Give us a like if you would. Come and see us on Twitter. And nice seeing you all again. Bye-bye.